So he's very bullish on Australian assets, but how are investors here thinking about local assets? The Australian's business editor, Eric Johnson, will be talking to Liz O'Leary, Head of Agriculture at Macquarie, David Williams, Managing Director of Kidder Williams, and John McKillop, Chairman of LAWD. Remember, you can submit your questions to the speakers via the Q&A function on the right-hand side of the screen. Over to you, Eric.
Thanks, Jackson. Well, that makes a great segue into this panel from between the discussion between Mark and Damon on foreign investment in agriculture. We've assembled three of the best in the business here to look at the issues and explore what is often an emotional debate around foreign investment, and particularly in an area that can be starved of capital. I'm going to go straight to you, John, first, just on this area. Look, why is there so much emotion in foreign investment when it comes to agriculture?
Yeah, sometimes it appears irrational, but I often think if you ask someone a simple question, you'll get a very simple answer. And most of the angst about foreign investment in Australian agriculture comes from the cities rather than in the bush itself. So if you ask someone, do you want Australian farms to be owned by Australians or do you want them to be owned by foreigners? Of course, people will give the simple answer that I want them to be Australian owned. Well, that's not the reality of where the capital comes from. So I think there's this irrational fear that somehow the food won't end up in Australia. But the reality is we produce enough food for 60 million people. We have a population of 25 million people. And just because you own a farm doesn't mean you have the right to export it. So I think a lot of those fears are ill-founded. You know, we seem quite comfortable for a mining company to come in with foreign capital and dig a hole in the ground and export it and leave when there's a hole in the ground, whereas agriculture has a very strong history of foreign investment coming in, doing a lot of good for the industry and then leaving, as their time goes or their investment horizon changes. A number of examples I can think of are the Boswell family that came in 57 years ago and really established a cotton industry in Australia. They're in the process of leaving now, but the cotton industry wouldn't be where it is today if it wasn't for the Boswells. And I think the same has been with the likes of Hazard that I work for, the Qataris. They weren't here for long, but they certainly left their assets in far better condition than when they found them. So I think there's been a lot of good come out of foreign investment. Now, whether they've made money out of it, that's not really the concern of government policy. It really is about, do they come in, do they do any good? And I think I'm yet to find an example where foreign investment has been bad for Australian agriculture.
And just one more point, John, your previous role at Hazard, so looking on, I guess, the other side of the fence in terms of foreign investment managing in Australia. So what was the experience for your investors, and what were they looking for when they were coming into Australia?
It primarily started as a food security play. You've got to remember, Qatar itself has a population of about 2.2 million, of which about 350,000 are Qataris, and the rest are expats, either from India, Pakistan, etc., or Western expats. So there is that. It is actually feasible to do a food security play with a relatively small amount of capital. Whereas if you look in China, there's no way that Australia is ever going to have a meaningful play in their food security. So they came out with that ambition. It was somewhat flawed insofar as when they had the Qatar crisis 3 years ago, and for those who don't remember what happened, Saudi Arabia, Bahrain, Egypt cut them off, and UAE cut them off overnight, and 70% of their food came from those 4 countries. When that happened, they came to us and said, what can you supply us? I said, well, we've got wheat half growing, so we can't really do anything with that. We've got, we can supply you sheep, but the sheep that we're producing aren't really suitable for the market that you want. So we did actually go out and buy sheep and process them and then air freight them. But again, that they weren't the sheep that we were producing. So really, I think at that point it dawned on them that you don't need to own farms in Australia to have food security. You really need access to markets, and at the end of the day, you need capital. And unfortunately, the reality is that whoever's got the most money has food security.
I'll throw now to David in terms of you've had an experience dealing with looking at trying to sell assets as well as buy assets from offshore and drum up international interest. What's the common question that international buyers ask you when it comes to Australia and investing in Australia?
Well, the single biggest issue at the moment is just the time that the FIRB is taking to process applications. And so, on their own timetable, that's a 6-month timetable. But if you look at many of the assets that have been before them in the last 9 months, including Lion and some of the ones we've had, 6 months is actually the minimum, not the maximum of what they take. And, the crying shame is that it's only public servants who somehow think that a 6-month waiting period to do a deal is acceptable to anybody. I mean, you can't keep a buyer on the hook or even a seller on the hook for that matter for 6 months, let alone have their banking and equity in place as well. So that's really the problem. And I think, it's a double-edged sword for us because of the politicisation of the Chinese market that, the government and the FIRB together is just making that situation worse without coming out and being honest about what's really going on. That we need to decouple. There's a serious need to decouple the politics of this and the trade parts of this. Everybody in the world's fighting with China. Look what they did to Merkel the other day after going up there and lauding her and having a great meeting. Then they come out and bag her on pork, So, but we still got to trade with them. We can hate them over here, but we got to trade with them over here. So, the serious problem for most of the people we deal with is just the time it takes to get approval. Now, nobody's objecting. The question you just asked, John. Nobody's objecting to ownership by foreigners if you're Canadian or if you're British or if you're French. Everybody's objecting to the Chinese, and that's really the only thing that needs to be fixed. But the FIRB needs to be fixed in timetable, and the government needs to decouple trade and the politics of this.
Do you think there were some recent changes in the FIRB or recommended changes? Do you think the messaging has become even more difficult for investors not from say North America, parts of Europe?
Well, I don't think it's anywhere else other than China, to be very honest, and that's the issue. That's what needs to be decoupled. I mean, we had one the other day approved by the FIRB. Well, the FIRB is approving these things. It's just taking too long. But then, we need the government to actually approve them. It's not the FIRB's problem. That silo is a timing problem. The second problem is really the politicisation and the coupling of these two things together. And so, we had one approved the other day, a Chinese investment, small one, 60 million. But, it took 7 months. And even then, it took a fair bit of pushing to get that through. And that's the only one I'm aware of out of China in the last probably 4 months. And that's got to stop. I think, if the FIRB can't do it in time, then let's outsource it. And it's a pretty simple process. You got to tick the box situation anyway. Let's outsource it. That's number one. Number two, I think there probably needs to be what I'll call a gold pass. In other words, if you've been looked at before and the government's been through you a million times and you've bought, I'll give you an example. You bought Borough Foods, you bought Bellamy's. Okay, give these guys a gold pass so it doesn't have to take 6 months. And that's for anybody in the world for that matter. So I think there's a number of things that can be done to reduce that timetable for the FIRB. But the most serious thing is still the need for a decoupling of what's happening in politics versus what's happening in the FIRB.
I'll take that point to come back to the studio here with Liz. Liz, you at Macquarie, you run a $3 billion fund. You have investments right across Australia, cotton to cattle and so on. Some of your investors are from offshore, or how would you make up that investor base there?
So we represent investors similar to PSP, although typically with a smaller investment allocation to agriculture. So as a result of that, they seek to commingle their equity investment with other like investors in a fund structure. So we've got a couple of those in operation across Australia, and I would echo David's comments that the challenge we face today is it's irrefutable that the equity is welcome. And to John's point, it's welcoming structures and strategies that enhance the quality of the farming or agribusiness assets they acquire, that employ local people, have local management, and help to drive agribusiness more broadly. But we do have a challenge today in that we've got a great narrative around that equity being welcome in this country, but we have a process that over the last few years has become incredibly time-consuming and is perhaps sending a contradictory message on two fronts. One is the time it takes, as David would attest to get a sizable transaction through. The second is the repetitive nature of the review process for those investors who are repeat investors, so they're known to FIRB, they're known to the Australian agribusiness community, but we put them through the same process every time. And then increasingly we're seeing a cost burden applied to this process that is now significantly higher than any other asset class. So why does that concern me? The transparency of the process is not the issue. Having a process is not the issue. The issue is simply competitiveness. And you know, there's not an endless stream of equity seeking this asset class. And that equity is also comparing Australian agriculture and investment to other jurisdictions. You heard that from Mark. So we have to be competitive and have an eye to New Zealand, have an eye to North America, have an eye to South America. Are our processes and is our ecosystem as friendly and competitive there? And then we have to have an eye to competitor asset classes. So are our processes and our ecosystem as friendly and competitive as commercial real estate, for example? And when you have a regime and farmland acquisition is more cumbersome, costly and challenging to navigate than commercial real estate, a foreign investor might scratch their heads at that. So I think we have to just be careful to preserve the robustness of review, robustness of transparency, robustness of understanding who owns what assets in this country and to what end. But at the same time, we've got to balance that with some sensible commercial outcomes.
Your background, your background in farming, so you know the area, you know the sector well. So from your point of view, why the emotion in the debate? Someone comes to buy a farm, a Chinese state-owned company buying a farm. Why the emotion there?
I think there's an understandable desire for transparency around the motivation behind the investment, and fair enough. But a little bit like John, I've not yet seen a foreign investor come in here and seek to diminish the value of production or diminish the value of the asset. So, you know, I think for us it's about getting our heads around what's the real question here. And the real question here is who are going to be responsible stewards and owners of valuable assets. I think the emotion John quite rightly talks about is it's part of it's our heritage. It's my heritage, and we all have a tremendous passion and affinity for the bush, but at the same time we shouldn't confuse that personal passion and emotion in a way that might limit the ability for the sort of equity we need to continue to invest in the value of those farming assets over time.
Well, on that point, John, what do you think about David's suggestion about a frequent flyer type system, a track record?
Yeah, the Foreign Investment Review Board does have a process that was seemingly working quite well up until 6 months ago, where you could get pre-approval for consistency of strategy and you simply go back and say, this is consistent with the strategy, you know our investors, you know our background, let's fast track that. It seems to have all slowed down a bit. It's probably also coincided with the inability of some investors, and I'm talking about those without feet on the ground here in Australia. So PSP obviously have feet on the ground, but some of the others who are wanting to come into Australia are being constrained by coronavirus, where they simply can't cite the assets, and therefore the deals are being put on hold. So it's probably the Foreign Investment Review Board's probably being let off a little bit lightly because of that slowing in demand. But that process is there, and that process needs to be reinvigorated, as David said, to streamline this. You know, we do need that foreign capital. The National Farmers Federation has a 2030 ambition of $100 billion farm gate value. And they're suggesting that we need 150 billion of additional capital to come into the industry in order to achieve that. So, and that's not going to come out from the Australian capital sector. For whatever reason, we're just not seeing super funds invest. We do need that foreign capital in order to achieve that ambition of $100 billion farm gate value.
And John, when you're again back looking with the Qatari fund, Hassad, did you ever find yourself bidding for assets against, say, Australian super funds at all, or Australian funds? Were they kicking the tyres on assets?
No, well, I came in at the towards the end of the 8-year mark, which seems to be my forte. As they were beginning to exit, so we weren't really competing. We were fortunate enough to end up exiting to an Australian-based super fund who is sitting right beside you there, in the form of Macquarie, as well as we exited to some local farmers as well. You know, and I'll use the example of property in Western Victoria called Tilapia Downs. It had 11. It was 11 properties. There were 5 permanent people living on that total aggregation prior to Hassad buying it. We put it together, or my predecessors put it together. Ended up with 36 people living on that family farm. On that farm, including workers, spouses, children. The local school stayed open. The bus runs stayed open. The sporting club stayed open. And in the end, Hassad exited it to the McBride family. So it's gone back to Australian hands. The capacity of that property has more than doubled. And it's now a very viable, vibrant property to be involved with. So I think that recycling of capital needs to be told a bit more. So despite the lack of investment from the super funds in Australia, I think the cycle is still working for large family corporates that want to buy back into the market again. And
David, I'll throw it to you. In terms of, I think we're going to be talking about for a long time the recent development between Lion and the paused sale of Lion there, and it's got on again, off again, back on the market with Miangu. So, what type of message does that send to the world? That process, that drawn out process.
Well, I mean, look, it's pretty obvious. You know, you had an asset that was owned by the Japanese getting sold to another foreign buyer, and it got held up for more than 9 months, you know, and the foreign buyer was somebody that already spent 300 million on Burra Foods, give or take, and a fortune on Bellamy's. So, you know, had a track record, and you still hold it up. But, you know, to the point about what value that destroys, imagine that, you know, that you're trying to hold your funding together and your market together for more than 9 months without an answer. In the end, it wasn't disapproved, by the way, they just walked. But you're trying to hold it together. But imagine Kathy Karabatis on the other side of that, trying to run Lion. She doesn't know who owns a business. She's got staff leaving. And in the meantime, you've got the firestorm of COVID coming through. You end up with a shadow of your own business. You know, you're just destroying so much value by this uncertainty and by the time that it takes. So, you know, that's a crying shame, I think, for that business alone. I mean, look, it's going to be a great thing for some Australian business. As John said, a lot of the foreign buyers probably won't be able to get here. It's 40 sites. So how are you going to get around those 40 sites, let alone get to Australia? But so that could be a very good thing for Australian PE funds or Australian corporates. Some of them have been mentioned in the press, as you know. So that's great. But, you know, what's it done to Kieran's value and to the value of Lion in particular?
I'll just shift the goalpost just slightly, Liz, in terms of, again, the local investment with your fund itself. So what sort of reaction do you get when you approach super funds saying, look, we've got this proposal about local farming, you know, do you want to chip in? Do you want to invest? What sort of feedback are you getting?
So we do have some local super funds in our various investment vehicles, but we also represent a higher proportion of foreign super funds. Look, I think it's fair to say with a lot of them we're still educating on what does an institutional investment in agriculture look like, particularly for a lot of folk relative to the family farm they might know from a grandparent, an aunt or an uncle. And so one of the real challenges for all of us is to paint the right contemporary picture of what the sector looks like, what performance can look like when you've got the right portfolio composition, the right diversification, the right go-to-market strategy, the right people. It's a very different investment proposition to a single family farm like the one I grew up on. So some of this is an education journey. Some of it is an investment time horizon that is unusual for some of the pension funds. You know, we've recently raised a fund that's a 15-year fund. We've got another fund that's an evergreen that our investors don't really ever see themselves selling out of. So it's a mindset around understanding how the contemporary asset class behaves and how relative risk reward plays out, and then understanding the right time horizon. So I think there's still a lot of conversation to be had to build comfort that this isn't akin to investing in a small block of land, a couple of 100 kilometres north of Melbourne. It's a very different investment proposition. I think we've got a great tailwind though right now, in that, you know, as many other asset classes are really wrestling with the impact of COVID, and many of those asset classes were traditionally thought of as not particularly volatile, you know, stable earnings, strong risk-adjusted returns. You see coming up through the middle, Australian agriculture with, you know, what is looking like a pretty stunning year for us, and so it really speaks to the incredibly uncorrelated nature of this investment, and I'm hoping that will encourage our super funds to take a second look.
And actually, David Williams, just through COVID, we've seen some listed agribusiness operations thrive through this period, despite all the complication and the confusion. Can you just put some colour around how investors are seeing the asset classes now?
Well, I think as John alluded to, there's a lot of people that would otherwise be here if they could, but because of travel restrictions, because of the impact on their own businesses, especially people who are supplying, you know, food service and so forth, and the ability to get around sites, means that it's left you know, quite a good opportunity for Australian companies, both listed and funds like Liz's and so forth, to have their day in the sun. I mean, there will be some good, and there is some good buying around because of the people that have sort of left the country or not coming back to the country right at the moment. So, you know, I think that's a really good thing. You see, last week, for example, we bought that almond farm for Select for 150, raised 120 for it, and the stock was up 30% within 2 days. You know, so, you know, there's not only that good buying around, but the institutions, if they're scared to do it on their own, can either do it through Liz or they can do it directly through, say, a Select Harvest. So, you know, there's fantastic opportunities there. That doesn't mean, by the way, that values aren't being eroded by the fact that that we've got a rather complex process with FIRB and with the feds.
So look, I've got a few questions coming in. Actually, we've got quite a lot of questions coming in, so keep them coming through. This one: Will corporate farming take over the traditional family farm? What is the right balance? Liz, I reckon you've probably a good one to answer on that.
And I guess we don't use the language of corporate farming and family farming. This is about scale, and there are a lot of family farming or family corporates, as John and I refer to them in Australia, that are very large, have very significant footprints, and, you know, operate similar platforms to the ones we operate. So it's not a question of corporate versus family farmer. It's really a question of what is the farm of the future? What does its scale and its footprint need to look like to manage its production challenges, and the obvious challenge being climate, and how well does it embrace technology and other innovation to drive productivity? So, you know, I think, you know, I'd reframe the question a little bit, but then I'd also just temper it with the simple statistics that, you know, people look at corporate farming and think it is taking over, and much as, you know, we three would like to think we're very important in the sector, the reality is that the family farm is still all pervasive. It's well over 85, I think might still be over 90% of farms are still owned by family operators in Australia. You know, we're small fry compared to the family farmer. We believe we coexist today and benefit one another, and I have no reason to believe there can't be more of that in the future.
Now, this one's a good one for John. given his experience around valuation. So, and this is a good question too. Given that most properties in Australia are family owned, how do you work around that in terms of valuation and governance factors?
Really, evaluation process focuses on I always use the analogy of the warehouse, not the business within the warehouse. So when our valuers from LAWD go out, they will be focused on the assets, the soil, the topography, the improvements. They don't look at whether that is a well-run operation or a poor operation, other than how it affects the infrastructure and the natural capital such as grass cover, etc. So it's somewhat divorced in terms of governance. What I think we will see, and Liz and I have talked about this in the past, is an increasing trend towards measurement of sustainability within valuations. And at some point, we'll start to put a dollar value on that to say that this property, is less sustainable. I won't say unsustainable, but less sustainable than that property, and therefore we need to actually to put a dollar value on that per hectare or on the overall property. So I think we're seeing that trend coming in. And again, I'll use the external corporates that we're involved with are now saying to me that they want to be able to measure their sustainability. And carbon's probably the first one to start with. What's their carbon balance sheet look like? But I think eventually it'll move into the broader ESG metrics around biodiversity and obviously the ones that we've got at the moment, slave labour, et cetera, et cetera. But I think that will increasingly become part of the valuation landscape.
And actually, a good point on ESG, Liz. I know that's been a conversation with a lot of your investors. So do you see a fund like yours now that operates funds on behalf of investors? Can it contribute to that ESG discussion?
Absolutely. We've gone from a world 5 years ago where ESG was a reporting requirement. Now it is a positive obligation. It is not unusual to see science-based targets attached to investment mandates and then very clear and transparent reporting obligations around that. So I concur with Fiona Simpson yesterday that we're entering a world where the environmental expectations in environmental markets go hand in glove with running a farming enterprise. The great benefit we've got is they actually drive productivity. So we're not trading off one against the other. We believe both can coexist on farm, and the farm will be more profitable in the long term. The real hook for this is ensuring that the sector finds a way, as John alluded to really value what good environmental management looks like and provide the right economic signals. Because as you know, if the right economic signals are there, we'll see a greater uptake of new practices.
Now, we've got a question specifically for David. Is there more that Australia can do to attract foreign and local investment in agriculture?
Look, there's certainly a lot more we can do in Asia and in particular in China because of this politicisation of the whole thing. Frankly, I think DFAT and Austrade are doing a pretty good job in North America and in Europe, and there's been a wall of money from the Ivy League universities and from the Canadian super funds, not just BSP but Ontario and others, and there's also been a wall of money from what has been over the last 5 years a crisis in the Eurozone. Where the real demand, the latent demand is still in China. And, just the jobs that we're involved in at the moment, we can see an easy $3 to $4 billion worth of latent demand into agriculture, probably another 2 or 3 into food, the likes of Menu and so forth, and probably another 3 or 4 into pharmaceuticals. And so you're seeing a lot of interest now. The Chinese are starting to pivot a little bit away from food and into nutraceuticals and pharmaceuticals, and that crossover between food. And you saw China Grand last year pay $1.8 billion for Certex, for example. There's a lot more of that in the pipeline that we're aware of. And so that's all just hanging in the wind, flapping in the wind, and we need to sort of fix that. So again, I go back to what I said. Gold pass, outsource some of the FIRB and decouple the politics. You get all those 3 things, fine. Now, the 4th thing, just to your question, is that, for example, we need to get DFAT back on our case in China. So you've got the CIA conference coming up in China in November, the China Import Association conference. It's only been going for several years, right? We've had 50 years of the Canton Trade Fair. This is the interesting thing that people should think about. At 50 years of the Chinese putting on the Canton Trade Fair, trying to sell us their stuff, and now we've got the Import Association conference where we're selling stuff to them. So, we need DFAT on that case, because from what I can see, we got precious little people going, whereas the New Zealanders are all over it. So, that's the sort of thing we need to fix if we want to bring more money into this country. And as John said, the Farmers Federation wants it. Our clients who are sellers want it, although my clients who are buyers don't, of course, because it leaves them with a free playing field. But I think that's what needs to be fixed, is the China politicisation. Let me just say one other thing on it, though, because I looked at Doug yesterday talking about wine and others. Look, the great untold story, I think, at the moment is the food shortage in China itself. Now, they've got shortage of protein. They've had shortage of protein for a while, and the sorts of things like swine flu and they haven't gone away. They still need stuff. So, our suppliers have got to concentrate very clearly on how we fix that in China. Now, part of it is, looking to the feds, but don't waste your time, because they ain't going to change anything. Josh is not going to change anything. Scott's not going to change anything. We've got to find other ways in. So don't think about the source, think about the channel. So I can remember situations where I've seen Fonterra cheese going in through Vietnam. I've seen meat going in through Hong Kong and Singapore. Let's concentrate on the channel and not the source, because you're not going to get anybody's attention in China at the moment, and you're not going to get the Federal's attention here. So I've got to figure out a different way into that country.
All right, well, look, unfortunately, we're out of time. We could probably go on all morning for this conversation, but look, thank you, Liz, David and John, for your time this morning, and I'd like to throw back to Jackson for today.
Thanks, Eric.